Hey everybody, Chemo Sabi here, giving you a Sunday night update, weekly candle close. We did have a monthly candle close a few days ago, so it's worth it to look at that and see how the trend is doing. And as you can see, the monthly closed a higher high. The higher low would come somewhere above here. So the monthly trend looks good as long as you don't close any monthly candles below 82,500. And you can see right here, this is a good order block right here on a monthly basis where you have the liquidity was taken from the low and you closed up. So that's a strong candle. Uh, Often these will get back tested right away in the following month or in the following period, whatever time frame you're on. But seeing as price went up that high, it may not come back down to test that order block and check it out. But if it does come down there, you got to see that as an opportunity. So we'll mark that off and we'll turn it yellow. The price on that is 84,434. Yeah, maybe a little lower. So 84.4. A lot of people were kind of annoyed by the price action being around 84 for so long. But if it does come back down there, you should have very strong buyers down there with that order block. They most likely won't let it go below there if it is going to remain bullish. And that would fit with the monthly trend, seeing as you closed a higher high here. There's where your higher low comes. Just something to watch for. So if price does go down there, see that as an opportunity. Zooming into the weekly chart here. Same difference. You kind of closed a higher high here. Higher low would come in the same kind of vicinity, unless if the market is going to play off of this trend coming from this high. There's your swing low. Here's your next high. If that's all you get, then that's your next higher low comes right around 100K. That's, of course, the most bullish scenario because that high, well, that high right there is that much higher than that high. So you go from that low, that much higher would be your higher low in the most bullish scenario. Don't know if that holds, but hey, it's a potential. If price does come down, though, it'll take all of the liquidity and potentially sweep down lower, but still close candles like on a monthly chart at 84. So we'll see if that that holds for now. That's it's the view that I'm seeing now on the weekly. Not too much going on here. Same as always, you can measure these wicks. That's where the supply is coming in. This is where the demand has been coming in. We'll see if supply can overcome demand and take out this liquidity. But the supply is up there at 109, basically previous all-time high. Uh, let's zoom into the daily. Daily chart, for me, this pattern up is completed. What comes after that should be something different, either a lot more downside or it's just going to chop around here and then repeat this entire leg. I did have some questions on Elliott wave theory in another video, so let's touch on that now regarding this move down and this being an expanded flat. I wanted to draw that out so that we can label it appropriately. But if it is an expanded flat, you would see this as wave A, this ABC down here is a wave B that broke the low, and the C leg goes up impulsively. So that is an impulse off the low, but it can be counted as an expanded flat. So if that is counted that way and you have this as some kind of, no, not a 1-2, that can be counted with 3 waves. Doesn't really matter to me. This is just for demonstration purposes, but you can have an A, B, C down like that. And we'll label the next ABC down as well. This being A, probably B here, and then C leg down. So there will be your ABC, ABC up, And then what would come after that is either a repeat of that ABC or the entire sequence giving you 5 waves down if it decides that it wants to take lower liquidity. And this is how markets do move. They tend to just want to take liquidity from everywhere they can. So that's the purpose of an expanded flat. And we have had quite a few of those in this cycle. So it would look something like this. This would be your B wave up here, and it just barely broke the high. So you're just getting an expanding structure. And if this C leg wants to come down, it would be like more like a WXY that would stop at 84, or it could expand down to the lows or break the lows down to like 67, 66, 66 or something like that. And that would be on the back of something in the financial system breaking or the geopolitical system getting really scary. So price may come down very, very sharply. Certainly doesn't have to. I mean, things could be breaking all around the world and Bitcoin just decides to go up. But that is how price has been moving over this this cycle. We can see a expanded flat right there. What was that in 2023? Expanded flat. This one was more of a running flat because it did not break the low, but it did break the high there on the B wave, and it came back down and double bottomed. So that's more of a running flat. Right here, another expanded. So who's to say? We might get another one up here, just much larger. I'm just counting the wave patterns, but in Elliott wave, this is the way it would be counted if that price action does come. I'd see opportunities at 84 and 67 myself if that wave pattern plays out. And another reason why that wave pattern would make sense is a Fibonacci retracement. If you were to take it from those lows, say you had a wave 1 there. Let's count out the wave 1 from the bear market low. Wave 1, 2, and then all this ends up being 3 up to here. And then wave 4 could be ongoing. It could have completed there, and you're getting ready to go up for 5. Totally acceptable. Or you got another leg down for 4 before a 5. And the thinking behind that is the Fibonacci retracement from wave 2 going all the way up to wave 3. You can see where the Fibonacci retracement came down to the 382. That is often a retracement for a wave 4. If you're taking it from that low, what is that, $25,000 low, and then counting these waves up as some kind of 1, 2, 3, 4, 5 extended fifth wave in the third wave, and then you would have a 50% retrace of the wave 3 up. So upon a panic event or something happening, this price would crash down here, and maybe that gives way to the money printer going crazy. But the 50% retrace is somewhere to look for wave 4. So you'd probably see the oscillators all reset. You'd have an oversold RSI on a daily, maybe even a weekly. It'll get kind of down, kind of far. You'd get down to wave 4 of a lesser degree. All of that stuff looks to be an opportunity. But since price bounced at the 382 on a wave 4, this wave 4 can be a running flat, or it can be completed already. That's acceptable as well. You would probably move the wave 3 to the prior peak and have some kind of expanded flat right there. The A, B, C, and that's complete. I find that acceptable as well. You can count this so many different ways. It's just trading it is the difficulty. And a lot of people will trade Elliott waves saying, well, what starts with an impulse ends with an impulse. So I can buy anything in this region. It's not going to go below that low. But then after it does break that low, then after the fact, you can count this as an expanded flat. So what I'm trying to say is, like, look for the opportunities. The wave count doesn't really matter until after the fact, but you can have ideas based upon these patterns that say this can be an expanded flat. If I get stopped out up here, I'm looking here. And then if it goes from here, cool. If it stops me out, then I'm looking for down here to take the liquidity. And that's like a three-phase market cycle, like a market maker thing where they have price that kind of chops in a little area, takes the low, takes the high, then takes the low again. That's just maximum liquidity. Make that a little darker for you. So the market maker will take liquidity, take liquidity, take liquidity, take liquidity. All he wants is liquidity. So where price moves, just look for the opportunities when they come, if they come. If they don't come, you have to look for opportunities a little tighter, a little higher up. All are acceptable. Personally, I don't want to see price get much below this liquidity level at 100K. That'd be great to show that as support. So looking very, very locally here, you look where your liquidity is. It's, of course, above current all-time high. Some stop losses there. And your liquidity is all down here at the 100K level. So price is likely going to visit that, especially because it came so deep. Now this can pop up, grab all-time highs, and then come back down here. But I'd be wary of price going up without taking this liquidity. But I felt the same way about this liquidity, and I still just had to take the buy setup on a higher high, higher low, and trade the trend as it was. But I'm open to the opportunity that this liquidity gets taken, you find support at 100K, and move up. And this move down may indeed look like a wave 1, 2, 3, 4, 5. So if that does count itself as 5 waves, I don't really care that it goes 5 waves. For me, that means that move down is complete. Something else is going to start thereafter because the pattern completed. It grabbed liquidity and it moves up. Once that liquidity is taken, though, you have to manage risk off of whatever low forms there if it does come, because if you pop up and then break down below that, the market is looking for lower liquidity. It'll look for the liquidity down at 92,000. And if you're looking for liquidity down at 92,000, you may as well go check that order block at 84,000 and just take it all. Take all the liquidity, fill in this inefficiency at 90, well, that's at 88K or something like that. Yeah, 88K. And touch the order block. See if that holds a support. And it may very well just look like this previous leg coming down. It might just do that really quickly. It might be even faster than the move up. The move down might be even quicker. So something to watch for. But be careful of the market maker painting 5 waves down. That can just as easily be counted as a WXZXY, and that's a completed wave 4 coming down to wave 4 of lesser degree, and you're going up for wave 5. The market maker will do anything to throw you off his trail and actually get people to short the market, because anybody trading Elliott waves said, well, that's 5 waves down, 3 wave pullback, short it, and let's go down, which is not, it's not wrong necessarily, especially if you start closing daily candles under these lows and a weekly candle below there, then you're starting a downtrend, and that would be your lower high. And that does work. And you would have a valid sell set up there. But I would say, put your stop loss at all-time high, because if it pushes up there, it's probably going a little bit higher. If this pattern plays out, we'd be going right into a daily cycle low that takes liquidity. And after that, if you do get the bounce up, that's where you manage risk off of your daily cycle low. If you fail the daily cycle, expect down until the next daily cycle. which could be a while. So that's my thoughts there on the daily. Let's check the 4-hour. 4-hour chart, still have that same pattern up there. I would expect this to kind of shape up more like that, or like that. Move down and grab liquidity, and that would complete a pattern. You can count it as 5 waves. I personally just put ABCs everywhere. Just look at it as A, B, C. You're still in a downtrend. You have your low, lower high, lower low. This is where you would expect a lower high for another push down into liquidity. If you start breaking up above 108, then something else is going on. Try to buy the pullback at previous supports around 106, 107, and see if it takes all-time high first. So that's the pattern I'd be looking for. If price is doing some kind of ABC from current area, then you may see price move up, take all-time high, and then come back down and do the expanded flat there just to take maximum liquidity, because if the price does want to go up, the market maker is going to want to clear these orders first before pushing down and feeding the orders to those stop losses over there. And that could be, the daily cycle low could happen around there, around the 5th, 6th to the 10th, or even the 12th of June before deciding to push up. Or maybe we don't take that liquidity at all. It's totally possible that the market doesn't need liquidity to keep pushing up. If there's plenty of people selling to the market maker here, the market maker can continue marking it up, and he won't need that liquidity because he has it here. But looking at previous supports as potentially acting as resistance right there at the 106.8 level. Somewhere around there. This was support before, so now you'd have a support resistance flip around that area. Also looking for a Fibonacci retrace of the 0.382 to the 0.5. 0.5 gets you to 107, which is right in line with all of that. You actually came short of the 382 there. So this move may chop around a little bit more and come grab 107 before pushing down into that cycle low. This can actually extend quite a bit. If this is a reaccumulation range, that would be drawn out a little bit. They just keep this pattern going here. And you have your selling climax there, automatic reaction, test, another test of the highs, and then spring the lows and then reverse. So I'm expecting this pattern to kind of play out here and then crush down, and it would be great if it looks like 5 waves, because we can just label that as a WXZXY and push up from there, go up for wave 5. But locally, your trend is kind of down here on this move until this move completes. Then you will start to get an uptrend out of there, and you'd be following the larger trend, which is just higher highs and higher lows. So watch for that. Keep them stops tight. Currently, I don't want to see price getting much below 100K and no closes below 100K. But we'll see how the thing progresses. If you want to progress it or check this out in real time, I've been posting on Slice like a madman. I think I have like 60 posts a week for the past 3 or 4 weeks here. So very active over there on Slice, because I like doing it. I like charts, so I post a lot over there, and hopefully that's helpful to my subscribers. So trying to provide value there, giving trade setups just about every day on very small time frames, of which you can raise your stop loss and let some run, or take profits when I take profits, because I'm in and out of trades quite a bit, especially right before waiting for a daily cycle low. So join me there. I'll try to leave the link down below. Until then, have a good night and keep them stops tight.